We are on lesson 4, our final lesson. Topics to be covered: business structure, business finance, and business taxes. Business structure. One of the first decisions you're going to need to make about your new company: what business structure will you choose? Here's an example of different kinds of business structures: sole proprietorships, partnerships, corporations generally, C corporations, S corporations, limited liability companies, and naming your business. Okay, Lansing Linoleum Company, Inc. was a C corporation. In a C corporation, all of the assets of the business are owned by the corporation. All of the family members who worked for the company were employees of the corporation. Family members could also be shareholders and hold all the shares of the company. For my final 25 years with the company, I owned 100% of the shares of the corporation and simultaneously was an employee of the corporation. Today, the favorite structure for startup construction companies is limited liability company. In a limited liability company, you have members of the LLC. The owners are members. You might have one, you might have two, you might have 99, 100. Chances are you'll have one or two members in your limited liability company. As is suggested by the name, a limited liability company offers you some liability protection. What this means is that your company operates as an entity and you are a member of the company, but you are less likely to be pursued for your own personal property, like your home, if your limited liability company is doing business. You will have a much better chance of protecting your own personal property and things that you own personally outside the company. These decisions should really be made with the input of a good accountant, CPA, and possibly an attorney. Here at the SBDC, we're going to give you an overview of the possibilities. We're going to tell you a little bit about what others have done, but you personally are going to have to make this decision, and you need to make it before you can file your application for your CCB license and name your company. Lansing Linoleum Company, Inc. could have been Lansing Linoleum LLC. How to choose the right business structure. You take into account the nature of the business, also tax and liability issues. Your resources for this decision are a lawyer and an accountant. The main differences in the structure you choose are the ways in which it reports or declares the taxes and owner liability. Those two things, taxes and owner liability. In a sole proprietorship, you pay all the taxes and you have unlimited liability. Your personal assets are the assets that someone would come after if you had a problem. So you have unlimited liability. It doesn't mean you don't have liability insurance, you do, but the responsibility remains yours alone if you are a sole proprietor. In a partnership, a general partnership is just like a sole proprietorship, but there's two partners, and again, they are responsible for everything in the company with very unlimited liability. Then there's a thing called a limited partnership. This is a structure that offers you an opportunity to offer limited liability for limited partners. Example of this would be my mom has some cash. She's willing to put it in. I am going to create a limited partnership with her where she partners with me, but she is the cash partner, and she will only be limited. Her liability will be limited to her investment. She will not be personally liable. So limited liability for limited partners. Limited liability partnership. A limited liability partnership is the favored structure for licensed professionals like attorneys. They do have limit to liability, and it's a good form, but does not get used in construction companies. C Corp, that was what Lansing Linoleum Company Inc. was. The corporation itself pays taxes on profits. The shareholders pay taxes on dividends that are given. It does offer the best liability protection for owners/shareholders. You are really separate from the company in this form. However, you have to do annual meetings, and there is a lot of paperwork involved in being a C Corp. Plus, a C Corp has to file a separate tax return. If you go back up to, well, let's go down here. S Corps. Let's look at S Corps. The corporation passes the income, losses, deductions, and credits to the shareholders to be included in their individual returns. That's called flowing through to the owners. It does spread the liability among all the owners. So an S Corp. They have some other advantages as well that you need to discuss with an accounting professional to see if an S Corp might be the proper form for your company. Then we have limited liability company, the LLC. This is a hybrid structure where it has characteristics of both partnerships and corporations. It has some liability protection. The tax liability flows through to the members. So again, you do not have to file a separate income tax form for your limited liability company. You could choose to, but if you choose, you can have the tax liability flow through to, say, we have two members. We will both get a statement at the end of the year that ends up going on our 1040, our personal 1040.